Hey, this is Nick. Today we're diving into QuickBooks Online specifically for real estate investors, and we're going to talk about how to track renovation expenses on your own projects, your flips that you're doing, your internal renovations, how to track them on the P&L or the income statement and the balance sheet, how to move it between the two. There's different situations that would warrant you to move it to one or the other. So if you are an investor or you're a bookkeeper for investors, you're going to want to tune into this. This is a quick video, but really, really important. We're going to talk about investing in our own property. So what I have here on the right side of my screen is a typical kind of investment analysis that investors are doing where we are buying properties and then we're going to fix them, then we're going to sell them, right? Flipping, okay? And when we do that, we're often looking at some kind of profit summary that looks like a P&L. And for this reason, many flippers are going to want to see their flips, their projects on a profit and loss. And I am in that boat as well. I like to see that as well. And so when we move to QuickBooks Online, we like to take advantage of the projects portal. Okay. The other thing that we have to keep in mind is that this investment, when we spend money, technically it doesn't belong on the P&L. Technically it doesn't belong on the P&L. It's an investment. It means it goes more toward like inventory in our balance sheet, right? However, we as business owners, the ones operating the business or the bookkeepers, we might have the need to want to see it in different ways. So I'm going to show you how we can see it in all the different ways and get kind of the best of both worlds here with logging our expenses. Now, in most cases, okay, most of my students, myself included, I'm going to want to default to putting my renovation expenses, I'm moving to the left-hand side of my screen now, onto my P&L, my profit and loss, so that I could see them on the projects report. That is really, really valuable to me. And the projects report only picks up P&L or income statement cost categories, okay? So that's one thing that's true. The other thing is that a lot of flippers, a lot of folks out there are doing renovations for third parties. They're doing renovations as a general contractor. And when you're doing renovations for a general contractor, you certainly want those costs to show up as cost of goods sold. And therefore, you're often mapping your products and services or your cost codes, okay, to the P&L. And we don't want to differentiate that. We don't want to separate out and say, okay, when I flip for myself, I put it in the balance sheet, but when I do work for others, I put it elsewhere. We want to put it to one consistent place. In this case, the cost of goods sold. And so for those two reasons, one being I like to use the projects portal and see a P&L, and two being I want to have a consistent products and services or cost code list. For those two reasons, most investors are defaulting to everything going to the profit and loss, meaning our accounts are profit and loss, at least at the time of the transactions. Now, I'm going to show you how we can get this kind of report and potentially move things over to the balance sheet while retaining this as well. So basically, this is a bunch of transactions. If I drill down into my cost of goods sold, we're going to see that I purchased the property with a journal entry. And when I purchased, I used the cost of goods sold account because I wanted it to show up on the P&L. And when I did, I tracked it to the project. That's essential if I want to see the entire thing at the project level. Okay, I did that. I'm also using class here. Not a requirement, but I'm using that as well. Okay, my purchase price, my buying costs, and here's how I paid for the property. Okay, and so great. At the time of my transactions, everything goes to the P&L. That's generally fine. The problem with that, and I'm showing this all in way back in time, so I have like a really clean P&L. The problem with that is on my balance sheet, while this flip is in progress, I haven't sold it yet, I've got a gigantic, let me just display by nothing here. I've got a gigantic negative net income. And I know that's not necessarily true and accurate. Like I'm investing in this property, I'm going to eventually sell it. This net income, this negative net income should actually be up as an asset, right? It should be as like inventory. So what I want to do is I want to, again, retain the best of both worlds. Can I see on my project details, the costs here, and then have on my balance sheet this net income come up toward inventory? I'm going to show you how to do that. Now you can decide how often you do this. I would say that you don't want to do it too much more frequently than every month. Maybe every quarter makes sense. You certainly want to do it every year. Any flip that spans a year, we don't want to have that net income reported in the year that those costs were incurred. We want the whole project to act together. So at the very least, you're going to want to do this at the end of every year. We want to move all these expenses up to the balance sheet. I'm going to show you how to do that with a really simple journal entry. Basically, and actually before I do that, let me just demonstrate. When I say costs going to the P&L, I'm going to create an expense just for a renovation cost real quick. Okay, and we're going to say this was, again, I'm going back in time, 2011. Okay, and right here, I'm going to say that I spent money on, maybe we can do kitchen. Okay, I spent money on my kitchen. okay, I spent $15,000, okay, specifically for this project. I'm putting it to the project because that's how I want to track it. I'm also logging class. So when I track this transaction, this $15,000 to kitchen, okay, because I've mapped that kitchen to rehab costs over here, right? Because I've got that mapping set up, that $15,000 is right here, shows up. All right, so that's what I want to have happen, at least at the time of purchase, because I'd like to see this total here showing up. And then when I eventually sell it, I love to see the sales price there. But, of course, the big problem with that is if I were to show my balance sheet, or if I were to maybe filter my balance sheet by class or customer, I mean, both are working in tandem here. I've got this negative 405. That's not okay. I need that to show up as inventory. Okay. So what I'm going to do is I'm going to show you this journal entry where we take the spending and we simply move it. Okay. So what we're going to do is we're going to grab all of the cost of goods sold. Okay. So I took everything and I'm going to filter this by a month. I'm going to say that we're doing this monthly. So I'm going to filter my dates and say, just give me all the expenses for the month of April. Okay, so I run that filter and I see that I spent $250 on the purchase, $7,500 on closing costs, and $37,500 on rehab costs. So all I do, it's great to have two screens for this. I'm going to do a journal entry as of the end of that month. Now I would actually do this transaction. I would physically do it probably 10 days into the next month, like 5/10/2011. But the date of the transaction will be 4/30. The reason we delay is we make sure all those transactions get in. All I'm going to do is I'm going to do a 1-for-1. I'm going to add one line for each one of these categories here. So my purchase price, I'm going to do buying costs as well. Let's do rehab costs. Okay, and I want to get these to 0 for that month, so I'm going to credit them exactly what I have, $250, right? I've got $7,500 in closing costs, and then the total, $37,500 in rehab costs, and I want to now indicate the class and the name. Now, here's where I get to do something really cool. I like doing. You know that a project is a sub-customer, so what I love to do here is when we pull it off of the P&L at a general level, I'm going to name the customer, but I'm not going to name the project, okay? And that's going to give me an amazing best of both worlds scenario where it will in my total balance sheet, move it to where it needs to be, but my project is going to retain itself, which is so cool. All right, so where do I put this, right? If it's coming out of cost and goods sold, where does it go? We're going to want some inventory items. So something like flips in progress is an inventory or other asset, flips in progress, other current assets, and then I'm going to have sub-accounts within that. I'm going to have my purchase price. I'm going to have my buying costs, and I'm going to have my rehab costs as well. Okay, and we're going to put in a 1-for-1, so $250 on the purchase, the buying cost $7,500. Now you don't need to separate this out, by the way. We could potentially just say flips in progress. We could just total it there. But I'm going to do the exact same thing, 456 Maple, just at the parent level. I do not need the project. There's really no point. These are balance sheet accounts, and they won't hit the project anyways. Okay, and this single transaction, okay, I'm going to keep this open over here, and I'm going to move over to my balance sheet as of 4/30/2011. So we can see that in action here. So I'm going to go balance sheet 2011 over on this side of the screen. I'm going to change the dates here to be just 4/30/2011. Okay, now at this point, I haven't saved this yet. I've got this gigantic negative net income. I'm just going to save this journal entry right here. Saved it. I'm going to refresh on my screen here. What I want to see is that big negative come up from the net income. It reset the dates, 4/30/2011. I want to see it come up from the net income over to flips in progress. And you see that's happening right there. All right? That's awesome. I love that. All right? The other thing is, what about my project? Now I did that big transaction. Does my project still stay? Let's see. Because I logged the funds coming out of cost of goods sold just to the parent, not the project, my project report stays exactly the same. So I'm able to see how much I spent at the project level, but it's going to the right place on my balance sheet. This is a really good move. It's a hybrid move where everything goes to the right place at the time of transaction, meaning the P&L where I want to see it, I want to report on it, but I can just monthly do a nice, easy journal entry to move it from the P&L up to inventory. And what's cool about this is this journal entry that we did for April, it's really easy for me to, let me bounce back over to the project. It's really easy for me to just copy that over to the next month's, right? So I can take what I did for April and I can change it to, okay, now it's May, and I'm probably doing this transaction in June, but I can look at the figures. I see that I spent $107,000 on the rehab. So I'm just going to take this journal entry, copy it, change the date to 5/31 of that same exact year. All right, and then just change the numbers here. Now in this case, I have no purchase price, no buying costs. I just have rehab costs, so it's 107. I don't have to do the tedious task of the name and the class anymore. I could take this single transaction. It's kind of like a template for me. It's ready to go, right? Perfect. All right, let's save that transaction. Going back to the project shouldn't change at all. But if I go to my balance sheet for the whole year now, we see that everything has moved up. The only thing that's hanging out there is debt service. I can decide whether I want to keep that there or not. This is a crucial move. If you're a bookkeeper, you need to be doing things like this for your client to really give them the reporting they need. Can you see on the project level what I need to see? And can we move things to the balance sheet as needed as well? This is a game changer for sure. Now, we talk about all of this in our end-to-end course, Real Estate Accounting Bootcamp. I want you to check that out. You have support from me in the community, and there's some really cool bonuses attached to that as well. I'd love for you to see that. And check out all the videos we have on this topic and so much more at incomedigs.com. I'll see you on the next video.